If you've been considering how life insurance can benefit you and your family, or maybe you have some maybe misconceptions or uncertainties about life insurance, or you're really wanting to just educate yourself more on the topic, then this is definitely going to be for you. My name is Plahuta, and this is Kristen Mabee. I'm an energetic alignment coach, and Kristen is a financial coach. And this is Heart-Centered Money Conversations, where we are having many conversations over the past many weeks about all different types of financial topics, all around financial wellness. It's mainly for people here in Ontario. And so the last episode that we did was all about a deep dive in budgeting. And today, like I'd mentioned, it's going to be all about life insurance. So if you've been considering how life insurance can benefit you and your family, or maybe you have some maybe misconceptions or uncertainties about life insurance, or you're really wanting to just educate yourself more on the topic, then this is definitely going to be for you. And just a little reminder that this series is for educational purposes only. Our whole intention with it is to really simply educate you so that you can take this information and make the best decisions for both you and your family moving forward. So without further ado, we'll let Kristen take it away for life insurance.
Beautiful. I'm so excited to chat about life insurance. That sounds crazy, but I'm so excited to talk about life insurance today because, in my experience, there's so much to know around life insurance, and there's so many falsehoods around life insurance or things that we don't know about life insurance. Like, a lot of people know that the insurance industry takes advantage of people, but a lot of times they don't know how it happens. And today I'm going to kind of share with you about different kinds of life insurance so you can get educated on things and make a good decision for you and your family. And so, first, I want to jump into why do some people not have life insurance? And typically, it's for a few reasons. One is they think it's too expensive, and some life insurance can be really expensive, I'm not gonna lie. They just haven't gotten around to it. It's like one of those things on the list that they just never gotten around to, right? It's like, oh, I'll do it later. It's kind of like the will program. I hear that a lot about wills as well. It's like, oh, I know we have to do it. So it's kind of just hasn't been a priority, maybe. It doesn't take as long as you think, I promise. Or they just don't think that they need it, right? So I was actually talking with a client more recently, and they said, if my wife passes away, I'll just eat beans and rice, I'll be fine. But I think one of the things that a lot of people don't think about when it comes to the purpose of life insurance, because reality, one of the biggest purpose of life insurance is if you were to pass away, can your family sustain their life without you, right? Like our household is running on two incomes. If something happened to me, is my partner still going to be okay to maintain the quality of life that he deserves, right? So, yes, you can cut back and make changes. Let's be real, the world is a lot more expensive today than it used to be. And you just had a huge change in your life, losing the person you love the most. So you might not want to have to make a ton of other changes and struggle financially as well. And that's one of the reasons that life insurance is there. And then, Laura, you and I were talking about how it can also provide emotional help as well because life insurance gets paid out as a lump sum. Do you want to share a little bit about that?
Yeah, I think it's something that I never really thought about. Kind of like before, I was definitely, when I was younger, I was definitely in the category of I didn't think that it was something that I needed. I was like, oh, well, I don't have like a partner and I don't have all of these big expenses. And to be honest, even when I did have a partner, I didn't even what you had just shared about like if you pass away, that income that you were bringing in toward the family, like I was like, oh, my partner would be fine. But I never thought further as to the emotional struggles that your partner
Yeah.
would go through having to grieve that loss and maybe potentially needing to take time off work to invest in their healing or their therapy or even just going on vacation or whatever it is that they love in order to kind of be with themselves
Yeah.
through that grieving process. So
Or the
that's
children.
definitely, or the children, yeah, it definitely brings
Yeah.
in another big piece when there's children there as well. So
Mhm.
it's definitely, I feel like there's so much value. It may not be for everybody, but there's definitely massive value. And those are definitely some things that I didn't really think of until more recently, since chatting with you and even just kind of my life changing with bringing Lily in and now having Danny in my life, that it's like, yeah, we
Yeah.
go through these transitions and maybe at one point it wasn't something that would be good for me. And then as life changes, it's great to kind of reassess where we're at so that we can then have things like this in place so that if something does happen, heaven forbid, then at least you
Yeah.
know that your family is still going to be supported.
Yeah, absolutely. I think it's like there's all these different layers that we don't necessarily consider.
Yeah.
So when we come to life insurance, like what do we even want life insurance to cover? One is funeral expenses. Like I know it's something we don't really think about, but funeral expenses and last taxes and all that like nitty-gritty stuff we wanted to
Mhm.
cover. Wanted to cover any debts that you may have, so that way your family isn't dealing with, I still have this huge car payment or I have to pay off the mortgage. Like, like a lot of times your life insurance can cover all the mortgage and then that your family can, live a lot more freely.
Yeah.
I know our mortgage is a huge amount of our budget, right?
Yeah. I think
It
that's
could
something
also,
too, Kristen,
Mhm.
that like I know I had a friend where her dad passed away and he had debt, and her and her brother actually had to then pay off that debt. Like I didn't know, it didn't even make sense to me that that debt would get
Yeah.
passed down to your children. Like
Yeah.
even that was crazy to me.
Yeah. It's honestly like the system isn't perfect, I'll say.
Yeah.
Without getting into
That
this.
was a good way to put it.
Yeah. It's also you can leave a legacy. So maybe you want some extra money to give towards your kids, whether it's, towards their education or giving them a down payment for a house so they don't have to struggle the way that you did. Like there's lots of different things. But the biggest one you want to consider when you're determining how much life insurance do I actually need is that income replacement. Because that's the biggest thing is, your family relies on your income every single month. And it's like, what does my family's life look like if they had half of the money coming in? This
Mhm.
is a really silly analogy, but it works. So if you had a toaster in your home and every month it popped up 2 grand or 4 grand every single month, would you spend $1,000 a month insuring the toaster?
I would
Like
want
you're
that
like,
for sure.
right? You're like, insure this toaster because it's going to give me 4 grand every single month. Even if I spend $1,000 insuring it, I still get 3 grand out of it. And like, you're the toaster.
It's a great analogy. I love it.
The good thing is your life insurance isn't $1,000 a month. And if it is, like, we need to have conversations. Right. So that's kind of what it looks like though, is like your family's relying on that toaster every single month to give them that 4 grand or however much your income is, right? So that's kind of what it looks like in terms of how much life insurance do we need. And then I want to dive into a little bit more about like the nitty-gritty behind life insurance. So here in Canada, like Laura mentioned, we're in Ontario. This applies for Canada, and a lot of the policies in the US work very similarly. So if you're in the US, like some of this will apply, but make sure you're educated on what is kind of in your area. So there's two kinds. One's called cash value, sometimes called whole life or universal life. The other one is term insurance. So the first one that I want to talk about is that cash value policy. So cash value policy, like I said, something's called whole life, universal life. Sometimes it's even called infinite banking or variable life. They have all these fancy names, but it's all kind of similar. So how it works, it's an insurance and a savings. They bundle it together. So then the insurance company holds your insurance and your savings. And you think, okay, that sounds good because I want insurance and I need to save also. Thank you for taking care of it for me. But there's actually a lot of challenges in these policies that people don't necessarily realize because let's be real, we don't read our insurance policies. And like coming from somebody who works in insurance, if you ask me if I've read my car insurance policy, like I've like kind of like briefed through it, but I've
It's
never
in
really.
such a language that you can't even really understand it. Even if you do sit down and read it, you're like, what the heck is this even saying?
And it's actually true. So like I've read policies for my clients that they had a whole life or universal life policy before, and it could be up to 100 pages, and I'll go through it for them. And even me, sometimes I have to really go through it a couple times to make sure that I understand what it's saying because they make it very complicated and it says something that could be put really straightforward English, right?
Mhm.
So here's what it typically says. So one thing is if you have this cash value policy, so a lot of these policies, how it works is they actually keep the savings portion for the first 2 to 7 years. So what that looks like, say the policy costs you $200 a month, every month 100 goes towards your insurance and 100 goes to the savings. So for the first 2 to 7 years, $100 should be going towards that saving month in, month out. but actually they keep the savings portion. So on your policy, if you look at it, it'll say 00000, and then it'll start saving. And that's what we see in these kinds of policies. But a lot of people don't realize that. Like if you were putting $100 a month in a bank account, and in 3 years from now, you want to take some money out because you need to fix your car, you want that money to be there. But this is how it works. And a lot of times, again, people just don't read their policies or understand how they work. So once that savings does start to accumulate over time, it's typically on average invested at 1 to 3.5% return, which if you know anything about investing, which we probably have talked about before, that's not a lot. Like it's barely keeping up with inflation. So there's opportunities for you to invest your money outside of a life insurance policy and get it to grow a lot more for you so you have more for your family. So another one is that, and one of my clients actually, they had a policy, they needed to take some money out because they needed surgery for their dog. So how they do it is that the savings that you've been putting in there month after month, they say if you want to take that money out, it's no problem, but you're basically borrowing it like a loan at an interest rate on average of 5 to 8%. So you're borrowing your own money. Again, if you went to the bank and took, $10,000 out because you wanted to go on a really nice vacation, they don't say, okay, Kristen, I need you to put that money back in, right? They're like, have fun, right? But that's how these policies work. And that's what a lot of people think. They're like, oh, I can take a ton of money out of these policies. But actually, there's legislation saying that the insurance portion of these policies has to be higher than the savings. So what happens over time, they keep buying more insurance to make sure that the insurance is higher as that savings grows over time. So where do we think that that money comes from? If the insurance is getting more expensive, but you're not paying anymore, they start taking it out of that savings portion. So they're draining your savings. It's like filling a bucket with a hole in it, right? And this is like, there's actually a really good graphic. I don't know, I think I found it on Google or something, but it's not like a me concept. There's tons out there that kind of talks about these different things.
Mhm.
And then the last one, Laura, I honestly didn't believe this until I read it in a policy. So they say the insurance is a living benefit and the insurance is a death benefit and the savings is a living benefit. We can't live and die at the same time. So upon death, they actually keep the savings portion. They only pay your family the death benefit. If you bought a pair of shoes, you would expect to get two shoes in the box, right?
Mhm.
But the challenge with these policies is you're paying for two things, but you only ever get one, right? So they say, okay, say you wanted to take the money out and when you're alive, you're that $10,000 to say, you can take it out and we won't give it to you as a loan. We'll give you that money, but we're going to cancel your policy. If you take it out as cash, they cancel the policy. So then you don't have the insurance anymore. So, but if you die, they keep the savings. Because let's look at it this way. Say your policy was $100,000 and you had $25,000 saved up, but they keep the 25,000. How much are they paying out of pocket for you? They're only paying 75,000 now, right? So that's why they do it, is like they're making it so they don't have to pay as much. So there's like so many things within these policies that don't make a lot of sense. But again, most people just don't understand how they actually work.
Mhm.
So I'd look into, if you're looking at different policies, understanding how they actually work and what it says inside the policies. And like I said, like a lot of this stuff is out there, but most insurance companies don't want you to know. I actually have two books that I'm going to recommend that they talk about this as well. So I hope this isn't backwards
It's
through
not.
Zoom. Okay, so this is Rich Dad Poor Dad by Robert Kiyosaki. This book is really amazing. It's a really nice read as well, but he talks about this a little bit. And then the other one is, I don't have it. I should have brought it up. So the other one is The Wealthy Barber by David Chilton. He's on Dragon's Den. If you watch Dragon's Den, I watch a lot of Dragon's Den. That's another really good one. I don't have that one at hand right now. The other one is Nine Steps to Financial Freedom by Susie Orman. So Susie Orman, you can look at her YouTube videos. She is like so straight up and to the point. If you want to get some more information about this, Susie's a really great person to look into. So this isn't like a Kristen thing. There's so many people that are really big in the industry talking about this. Dave Ramsey also talks about this. Some people are like a love him or hate him kind of situation, but I know he talks about it as well. So there's a lot to know about that. And a lot of times with these policies, they're called whole life policies, right? They want you to have it for your whole life. But Laura, let me ask you, if you had, a couple $1 million saved, do you think that you need life insurance or your family would probably be fine?
I think they'd be fine.
Right? So we call it the theory of decreasing responsibility. When you're younger, you have maybe a mortgage and kids, they rely on you, your spouse is relying on you, you don't have a lot of savings. So your need for insurance is a lot higher because you don't have a lot of savings, but you have a lot of responsibilities. But it switches over time. Over time, your mortgage is paid off, your kids hopefully move out eventually, right? And your savings is a lot higher, so you don't necessarily have a huge need for insurance. So the way that I look at it is I like term life insurance. So term is for a period of time, right? So term life insurance, I say buy term and invest the difference. So you want to make sure that you still have the insurance and the savings, but you want to have full control over those things, right? Like, why would you work really hard to save your money and then not have control? I don't understand. But this is the thing is do your research. So so with a term policy, it's strictly insurance. So you have a term policy, it's a lot less expensive as well. And then you invest the difference outside of the policy. So okay, Kristen, what do you mean invest the difference? Say you had a whole life policy, that example that had, $200 a month. Okay, so you have $200 a month in a whole life policy, and now you buy a term insurance policy and it's only $85 a month. So now you've freed up $115 in your budget that you can now invest. So you can invest $115 every single month. So that's what I mean, invest the difference. So it's using the same amount of money, but allocating it in a way that's going to work best for you, right? Mathematically, it works out better every time I've done it. So typically, again, they're less expensive, but you can invest this. You can invest it at a rate of return of 7, 8, 9, 10%. You got to figure out what works best for you. If you're like, how do you get 9%? We need to talk. Lots of ways to get 9% without taking on a lot of risk. And that's more in the investment side of things. So that's part about it. So I think it's really important to understand how these life insurance policies work and what you might need in terms of insurance, how much you need, and your family, right? So typically, like if you're in a spousal relationship or a common law relationship, like, you want to make sure that you have that conversation with your spouse because he might say, "Oh, my wife only needs $500 a month," and she's like, "What? Only $500 a month?" Right? Like you want to make sure if you're gonna have life insurance, it's actually gonna work when you need it, right? And that's the problem with insurance is a lot of the times you don't know that these policies are gonna work out until you need it. And that's another thing that I want to touch on is a lot of policies can take a really long time for them to pay out. So our life insurance policies, we state 93% of claims are paid within 14 days. So it's like before the next mortgage payment is due, right? And I think that's really important. It is, right? Because your family, we talked about, just went through a huge emotional struggle and they don't want to be thinking, like, can I pay my mortgage next month? Where I've actually met people, it's taken 5 years for the insurance companies payout. I hear a lot of times like 6 to 8 months, like 5 years is an extreme. But this is the thing, is like still 6 months of mortgage payments. I don't know, could you do it? And I think that's a lot of like, I hate to bring this up, but like during COVID, people lost their income for about that time, 6 months or so, and they saw how much that could affect their family, right?
Yeah. And even if you
So
do have that money places, like chances are you have it invested. So you're going to be taking from your own, then losing the investment that you're making.
yeah, you're not getting the growth on it.
Just like, and even the stress of having to be in that state and having to go to the bank and move stuff around and like get stuff out to pay it, like just so much unnecessary stress that you
Yeah.
have, I feel at that point.
Exactly. And like, so I met somebody the other day and they were saying like their spouse was off work for not even a long time, but they had to bleed through their savings. And it's like, imagine having nothing in place. And like, what do you do after all your savings is gone? Like, you can only make it stretch so far. And that's
Hmm.
the one really cool thing about life insurance as well, is you get it as a lump sum. So what happens is you can invest that money and it can grow over time. So you never have to worry about it running out, if you have maybe somebody helping you or if you know how to do it properly, right?
Yeah.
So there's a lot of great things. There's a lot of other things inside our policies that I'll speak on, is like we have a terminal illness benefit. So like it's not necessarily what the policy is worth like when you pass away, but it could be used for your spouse to take time off work to take care of you, or you can travel and do all the things you love, or you can just get your affairs in order, right? Or you can get treatments, things we don't have here. So you want to make sure that your policy is actually working for you, essentially.
Yeah.
So that's a little bit around life insurance. I do have two other types of insurance I do want to chat about, but I wanted to open up. Laura, did you have any questions about that specifically so far?
No questions, but I just like, I feel like a lot of the time we can feel like we're invincible and this stuff won't happen to us until it does. And it's interesting because I know even just recently, like I have some family members, and then there's also just other people that you hear where they're having like these big things happen in their life health wise. And it's like if they were able to have
Yeah.
something like this in place where they could then have that financial compensation to be able to help support them, like
Yeah.
I feel like when we don't have our health, it brings in like so many extra stressors. And then to throw the financial piece on top, and anything like when you know about healing, in order to heal and actually allow yourself to heal, you need to be in a relaxed state where your body can actually do the healing, right? So it definitely kind
Yeah.
of sets you up for greater success, even to heal from the health issues with that extra
Yeah.
support too.
Yeah, absolutely. I think that's huge. And I think as we get older, we see it a lot more. Like I
Hmm.
had a family member pass away, I think mid 30s. And it's like we would have never ever expected that. And it just makes me really a lot more passionate about what I do, because like you just never know.
For
You
sure.
just never know.
Yeah.
Yeah.
Yeah. No
So,
questions though. If anybody has questions, feel free to put them in the comments. Something
mhm,
that's kind of came up so far, and then Kristen can definitely come back and answer those. But we'll just keep
absolutely.
going and
Yeah. So the other two types of insurance, it's called credit insurance or mortgage insurance. So if you have mortgage insurance on your house, a lot of the times this is like put into your mortgage, and sometimes you have to check no if you don't want it. They almost just like assume that you're gonna take it. But there's no, what happens with credit insurance or mortgage insurance. Credit insurance, sometimes you'll see on your credit card statements called balance protection or something along those lines, but there's no medical. Like you don't do a blood test or urine sample to get these types of insurance. So it's called post-claim underwriting. There's a really good video by CBC Marketplace that I'll link for you as well. Check it out. It's an older video. You're gonna feel like you're in the 90s, but
Mhm.
all the information's still relative. So how it works is you're paying for it every single month. And when you pass away, you hope that it's going to pay off your mortgage or your credit, like your visa or whatever you have it on, right? But they go back into your medical history after you passed away to see if you actually qualify for it. So it's a very low payout rate. I won't throw a percentage out there, but we've talked with people at the bank and they've told us the number I got was under 10%. So do your research. But it's really challenging, especially mortgage insurance, because mortgage insurance, you're locked in for a 5 year period or however long your mortgage is, and say it's $100 a month, right? So at the beginning, you're paying $100 a month for whatever the amount you have on your mortgage, or say 500,000. But over time, you pay off your mortgage over the 5 years. So at the end, you're paying $100, but you're not getting 500,000 anymore. You're getting whatever the balance is. So you're paying for more than what you're actually getting. And that's why a product like term insurance, in my opinion, is better, because it's level for a longer period of time. You're paying for what you get. So again, this is a lot of facts that I know about the insurance industry, but always do your own research. Really just want to do my due diligence in telling you guys that. But check out CBC Marketplace because again, it's a third party source that can help you out. And I think it's just really interesting, what we're taught and maybe not taught around these products.
Mhm.
So that's really the things that I wanted to share with you today. I know there's so much out there when it comes to insurance. If you have any things you're maybe uncertain about as well, I'd love to see what you have in the comments, kind of drop that and I'll respond to you. I do want to give you a little bit of homework as well.
Mhm.
So check out the CBC Marketplace video. Do some research. I think I've been very clear. You want to know. And then maybe check out those books, like maybe the Susie Orman one. It's really not that that big. Or even if you're like, Kristen, I don't read, check out some YouTube videos from her. She has a lot where she talks with people about their policies and she'll go through it. So I think it's really interesting just to get that information for yourself.
Mhm.
Yeah, Laura, is there anything that you want to add? I think that was really great just to kind of get the information out there.
For sure. No, I feel like that was gold. And I love what you shared, like even the little bit about the mortgage insurance and the credit insurance, because even those small little things, I remember back in the day, and I mentioned this in the credit card one that we did, where I was paying that credit card insurance. And then I ended up going to the bank
Mm,
and telling them like that I never said to pay for it. So then they reimbursed me for it. But if I think about like, even just if people are paying for that or paying for the mortgage insurance, being able to take that money and put it elsewhere to have it grow for you, like it's just those little tiny
mm,
ways that we can take money back and put it into a place where it's going to grow. Like over time, it's going to make a massive difference in your
yeah,
life or in like your family's life. So it's just like those little tips that you give like that. I love because they're just like little ways that people
yeah,
can start making more money and earning more money for themselves. They can really feel financially secure because everything is
yeah,
going up in price, and who
yeah.
knows what the next few coming years are going to be like. And it's just better to kind of start doing all of this stuff so you can create that future.
Like one step at a time, you're right. And like what I've seen, the last few people that I've helped, one person was spending $84, the other one was 88, the other one was, I think it was $121 a month that they're spending on these types of, that was just credit insurance. That wasn't even mortgage insurance.
Yeah,
So imagine you have like
crazy.
$100 every single month because of credit insurance, like $1,200 a year. That goes a long way. And if
So,
you can lock in a proper life insurance, like you're already spending that money anyway, so you have it in your budget, but using like a proper life insurance that's is going to be there for you when you need it. I think
mhm.
that's the biggest key. So, and then if you have extra left over, invest it, right? And that's why like what I do is I take a holistic picture when I do an analysis for people. And if you want like a financial audit, reach out to me. I'd be more than happy to see what I can do to kind of and just give you some pointers on how you can make some small adjustments. But taking a holistic picture gives us an advantage because we can say, you really don't even need this product. Why don't you do this instead?
Yeah.
Where I think a lot of people, if I worked at the bank and I was like, okay, I need to sell a certain amount of credit insurance and mortgage insurance to hit my quota, it's very different, right? So I think there's definitely advantage of, from my perspective, having this holistic picture where we can really deep dive and see, what do you actually need? Because
Mhm.
even for myself, like as soon as I heard about this, I checked my statement. I'm like, I better not be paying for this. But
Yeah.
like Laura said, is sometimes you can even get reimbursed for it, which is really cool.
Yeah.
So
Yeah.
yeah, beautiful. I think that's all that I wanted to share today. I'm really glad that I was able to cover that with everyone today. And I know,
Mhm.
Laura, like you have your experience with insurance as well. And so just to summarize, if you haven't gotten around to insurance, it doesn't really take that long. So maybe just set an hour aside and look into it and figure out how much you want to have coverage for your family and what makes the most sense. It's
Mhm.
pretty easy to break down those numbers. And then what kind of insurance is going to work well for you? So do a little bit of research around that. If you need help too, the episode before where we did a deep dive into budgeting, that might help too. Say like, how much am I willing to spend on my life insurance? Because
Totally.
reality is like if I gave you a policy that was $400 a month, which I've never done, but for example,
Mhm.
right? You're gonna say, Kristen, that's way too expensive, right? So you need it to fit into your budget because a policy that doesn't fit into your budget doesn't even work, right? So you want to look at those things as well. I'm really excited though, because on the next episode, we're going to be talking about RESPs, which I feel like kind of go hand in hand. So a lot of times when we think life insurance, we look at it more as for families, but it does ensure your insurability. So if you're younger as well and you're like, why would I need life insurance? And you're like, I don't have a family, I don't have kids. It ensures your insurability. So if you do want a family later on, one, it's way cheaper when you're younger. You're never going to be healthier. You're never going to be younger. But if you do develop a health issue later on, you might not be able to get that insurance. So get it now while you're young if it's something that you do want to do in the future. So something to consider. So we're going to be talking about RESPs though next time, education savings plans, and learning everything about that. I just want to take a minute to thank you for checking out this episode and the series. We have so many great topics in the series now. So if you're looking to learn about finance, if there's anything specific that you want us to cover, I'd be more than happy to dive into that. Like I said, I just want to take a second to thank you for checking us out. Like and subscribe, all the things. And we'll see you on the next episode. Take
Bye,
care.
everyone. Thanks so much, Kristen.
Bye.